All right. Jumping right into this deep dive, you've given me these excerpts here from Pasted Text. And it's all about how often we should check our credit scores. Honestly, kind of curious myself. I mean, we all know it's important, but
Right.
is there, like, a sweet spot? Too much? Not enough?
Yeah, it's something a lot of people wonder about, actually.
Right.
But this deep dive, you'll know exactly what to do for your credit.
Okay, so starting with the basics, why is keeping up with our credit scores so important? I mean, besides just getting approved for loans.
It's kind of like a vital sign for your finances.
Oh,
Think of it like going to the doctor for a checkup.
okay.
You're not necessarily sick, right?
Yeah.
But it's good to catch things early.
So it's like a credit score checkup helps us avoid bigger problems later on.
Exactly. And this source, it lays out 3 big reasons why it's so important.
All right, lay them on me.
First up, tracking your overall financial health.
Okay.
Your score, it's kind of like a financial report card for lenders. Shows them how you handle your money.
So it's not just about a single loan, it's like my whole financial track record.
Exactly. Which brings us to number 2, spotting errors and fraud. Think of your credit report like a security system for your finances, right? Make sure no one's messing with it.
Oh, so like incorrect late payments. Or, God forbid, someone opened an account in my name.
Yeah.
Yeah.
Catching it early saves you major headaches later.
Okay, starting to see why this isn't a once-a-year kind of thing.
And lastly, number 3, it shows you how your actions affect your score. Like opening a new credit card.
Right.
Or paying off a big debt. Checking after shows you the impact.
Oh, instant feedback. I like that. All right, so that's the why. But how often should we actually be checking this thing?
This source, it recommends at least once a month.
Once a month, that's doable. Even for someone like me who doesn't live and breathe their financial statements.
It is. It's not like a photo. Your score, it's always changing, right? Based on what you're doing.
Okay.
Regularly checking. Helps you catch anything weird before it becomes a problem.
Makes sense, especially if something unexpected pops up.
Exactly.
Yeah.
Plus, there are tons of free ways to check these days.
Oh, really?
Yeah. Credit Karma, Credit Sesame,
Right.
even banks and credit card companies offer it.
So, no excuses then. Seems easy enough to stay on top of it.
For sure.
Yeah.
But here's the thing. Are there times you'd want to check more often?
Ooh, good question. Does that ever make sense?
Think of it like your health. If you're in great shape, a yearly physical's fine.
Okay.
But training for a marathon, recovering from an injury, you'd probably see the doctor more, right?
So our credit score checkups should also depend on our situation.
Exactly.
Yeah.
Say you're rebuilding your credit after a tough time, checking weekly. Can be super motivating, seeing your progress.
Okay.
Like watching the numbers on the scale go down when you're working out.
Makes it feel more like a challenge I can win, not so scary.
And then there's, big milestones, like buying a house or a car,
Yeah.
checking monthly, or even more, leading up to a loan. Super smart.
So you know your score is tip-top before you apply.
Exactly. Could save you thousands in interest.
Okay, so rebuilding credit and getting ready for big loans. Any other situations?
Well, there's credit utilization, how much of your available credit you're actually using.
Right, the gas tank analogy.
Exactly. Keeping it low, below 30%.
Yeah.
That's ideal. And if you're actively managing that,
Yeah.
regular checks help you see how your spending and payments affect it.
Like a personal finance coach. Okay, but I gotta ask, this is a big one.
Yeah.
Does checking my score actually hurt it?
Ah, the million-dollar question.
Right. I'm always worried about that. Is it true or just a myth?
It's a myth. No worries. It's like looking in the mirror, you're not changing anything.
Oh, thank goodness. But why do people think it does?
Soft inquiry versus hard inquiry. Checking
Yeah.
your own score. That's soft. Lenders can't
It's
see
no
it.
matter how many times I check, I'm good.
You're golden. It's the hard inquiries we got to watch out for.
Okay, break those down for me. What are those?
When a lender checks for a loan or credit card, like when you're shopping for a mortgage,
Oh, okay.
multiple banks pull your credit. Those are hard.
So it's not me checking my own score, it's them checking it that can hurt.
Exactly. Hard inquiries, other lenders see them, might lower your score a bit, especially if there's a lot.
So be mindful of how often I'm applying for new credit. Not scared to check my own score.
You got it. Now, when you are checking, what should you actually be looking for?
Let's dive into that. Okay, so we've laid the groundwork, why it matters, how often to check. But now, the good stuff. How do we actually build and maintain a healthy credit score? Like actionable steps.
It's like having the map, right? Now we need directions.
Exactly. So first step on this credit building journey, what's the move?
It's going to sound
Yeah.
like a broken record, but consistently making all your payments
Yeah.
on time,
Yep.
every single time.
Yeah, we hear that a lot. I'm guessing there's a reason, though.
There is. It's the foundation. Shows lenders you're reliable, can be trusted.
So building that reputation of responsibility.
Exactly. Payment history, it's huge for your score. Even one late payment can hurt.
Like the foundation of a house. If it's shaky, everything's messed up.
Perfect analogy.
Yeah.
So yeah, set reminders, automate those payments, whatever it takes.
Gotta stay on top of those bills. All right, what else?
Let's talk credit utilization. Remember that.
Oh, yeah, our gas tank.
There it is. Keep that ratio low, under 30%.
So not just making payments, but also how much of my available credit I'm using.
Right. If you're always maxing things out, lenders might think you're risky.
Makes sense. Responsible use, not being totally dependent on it.
You know, something else. Credit mix.
Credit mix, is that like a financial cocktail?
Haha, not quite. But it refers to the different types of credit you have. Active, I mean.
So credit cards, loans, or mortgage, all that.
Yep. Having a mix can actually be good. Shows you can handle different types of debt.
Like I'm a well-rounded financial person.
Exactly. But don't go opening tons of new accounts just for this.
Right, because then I get hit with those hard inquiries.
Yes, exactly. Find the balance. Healthy mix without going overboard.
Manage what I have, new credit, only when I really need it.
Now, this one's often forgotten. Age of your credit history.
My credit history has an age, like a fine wine.
Uh-huh, kind of. Lenders like to see a long, established history. Shows responsible management over time.
Okay.
The longer, the better.
Proof of my financial maturity, I guess.
Think of it as your credit resume. Longer track record, more confidence from lenders.
So even if I don't use my oldest credit card, don't close it.
Good question. Generally best to keep those old accounts open.
Okay.
Closing them can shorten your history, might lower your score.
Losing part of my financial history, basically.
Exactly. So we've got the big four. Payments, utilization, mix, and age. But what about, when we mess up?
Oh.
Everyone makes mistakes.
Right. Any way to recover from those financial slip-ups?
Of course. Don't freak out if you miss a payment or two. Happens to everyone.
That's good to hear.
Key is be proactive. Miss a payment. Contact the creditor. Explain the situation.
Don't just ignore it, hoping it goes away.
Right. Be honest, upfront. They might waive the fee or work on a payment plan with you.
So communication is key.
It is. Benefits both sides to find a solution. Now, what about credit repair?
Oh, yeah. Is that something to consider if I've had, some credit challenges?
Credit repair, it's a great tool if you've had some bumps in the road, like taking your car to the mechanic.
So I can fix things, rebuild my credit health.
Absolutely. First step, get your credit reports, all 3 bureaus.
Right, those free annual ones.
Yep. Look them over carefully. Any errors, wrong info.
Like fact-checking my credit history.
Exactly. Any errors, dispute them right away. They have to investigate and fix them.
I would be my own advocate then.
Yes. Once those are fixed, focus on building good habits from then on.
Okay.
Consistent payments, low utilization, managing things well.
Fix the past, good habits for the future.
Exactly. It takes time, but it's doable. With effort, of course.
This is all super helpful. But I gotta ask, any quick fixes? Shortcuts to a better score? Magic wand, maybe.
Uh-huh. Wouldn't that be nice? Credit score's a marathon, not a sprint.
So no overnight miracles.
Sadly, no. But there are strategic moves for a little boost, short term. One is become an authorized user.
Oh, I've heard of that. But how does it actually work?
You're added to someone's card, can use it, but not legally responsible for the debt.
Okay.
If they have good habits, good score, it can help you.
Borrowing their good credit karma.
Kinda. But choose someone trustworthy with excellent credit.
Right. Don't want to accidentally get their bad habits.
Exactly. Another strategy, request a credit limit increase.
Wait, really? Wouldn't that be bad?
Not necessarily. If your spending stays the same but your limit goes up, your utilization ratio goes down.
Oh, I see. Bigger gas tank.
Exactly. Can bump up your score a bit.
Okay, so tactical moves are possible, but still got to build those good habits over time.
That's the core of it, yes. And remember, everyone's different. What works for one might not for another.
Right.
Find what suits you, stick with it.
This has been, wow, incredibly insightful. Monitoring, building good credit, the whole 9 yards.
Even busted some myths along the way.
But hold on tight. Part 3, we're zooming in on those specific situations where checking your score more often might be the way to go.
We'll break down when and why it matters.
We're back. Feels like we just crammed a whole credit score course into 2 parts.
We've covered a lot, yeah. Why monitoring matters, building good credit, all that.
Okay, now I'm ready for the advanced stuff. When does it make sense to check more than once a month?
It's like leveling up your financial routine.
Mm.
Sometimes got to switch things up.
Okay, give me those level up situations.
One is rebuilding your credit after a tough time. Like recovering from an injury, got to keep a close eye on things.
So bankruptcy, foreclosure, even just unemployment that messed with my credit.
Right. Checking weekly, even twice a week, can be motivating. Seeing things improve.
Yeah, like seeing those results at the gym. Keeps you going.
Another one, getting ready for a big financial goal. Mortgage, car loan, things like that.
Oh, yeah. Those big moments, good credit is key.
For sure. You want your score in top shape before you even apply. Checking regularly can help you catch problems early.
So you get the best terms, too.
Exactly. Now remember, credit utilization. That balance between your credit limit and how much you're using.
Right, our gas tank. Don't
Right.
want to overfill it.
Exactly. If you're working on lowering that, frequent checks show you the impact of your choices.
Spending, payments, all that.
You got it.
Yeah.
And of course, fraud.
Yeah.
Identity theft. That's where regular checks are super important.
Scary stuff, but better to be safe than sorry.
Absolutely.
Yeah.
Catch it fast, minimize the damage, see something weird. Unfamiliar accounts, score drops suddenly. Take action right away.
Okay, good to know. And hey, we've got those free weekly reports from annualcreditreport.com until the end of 2024.
Oh, yeah. Those are great for staying on top of things.
Right. What about applying for multiple cards or loans in a short time?
Ah, yeah. Sometimes you got to shop around, find the best deals.
Mm-hmm.
But be strategic about it. Space out those applications as much as you can. Lessens the impact of those hard inquiries.
Instead of hitting them all at once, take it slow.
Exactly. Each hard inquiry can ding your score a little. Planning helps.
Wow, this whole deep dive has been amazing. Learned so much. Monitoring, building credit, all of it.
We covered a lot, yeah. Even busted some myths.
Feeling like a credit expert now. So bottom line, it's not about obsessing over the number,
Right.
but knowing what's going on, being proactive.
The more you know, the better choices you can make.
That's it. Knowledge is power, right? Taking control of our finances.
Exactly. Setting ourselves up for success.
Well, everyone, that's a wrap on our credit score deep dive. Hope you enjoyed it as much as we did.
Keep learning. Keep exploring. Credit and personal finance is a fascinating world.
Stay curious, stay informed, and keep those credit scores healthy.